We haven't even really started the sports streaming battle, and it may already be over. I think ESPN's win in sports streaming could make Disney stock a 10x stock. Yes, I said Disney, the company that seems to be completely unloved by the market. A lot of people thought that they were going to be overrun by Netflix, by Apple, Amazon, all these companies that are spending billions of dollars to buy up content. But Disney has won the best sports rights, and now other companies are coming to them to become part of their bundle. This really shows the power that the right content and the right number of subscribers can drive in the digital business. ESPN and Disney are going to follow the smiling curve, just like social media did, just like streaming did early on with Netflix, just like publishing and gaming. This has happened over and over again since the internet really reached scale in the early 2000s. The companies that you want to own are the biggest companies with the most power and that customers choose to interact with. That is going to be ESPN in sports. I think this makes Disney a phenomenal investment, but let's dig into all of it. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Don't forget to subscribe not only here, but also my Asymmetric Investing newsletter. There's a link on the screen and a link in the show notes. That's where I'm going through even more of my research, and then also have the asymmetric portfolio there. I started that from zero, buying stocks every single month, so I let you know what I'm buying before I buy them, and that portfolio has done extremely well versus the market. So love to have you as part of that community. And thanks to this video sponsor, Fiscal AI. Go to fiscal.ai/ASYM. You can try out their product for free for 2 weeks, and then you get 15% off. I'm going to be using them throughout this video, but this is where I get all of my images. A lot of my research is done on Fiscal AI because they got everything you need, from market data to financials to SEC filings, insider buys and sells, transcripts, even AI tools that you can just talk to when you have questions about a company. So go to fiscal.ai/ASYM if you like what you see there. But let's go to some of the recent announcements for ESPN, because ESPN, I think, is really going to be the crux to the power that Disney is building in the streaming business. Now, I'll start with some of these things that happened last week. I'm not going to delve into each of them, but they announced right before earnings that ESPN was going to acquire the NFL Network and other media assets, including their fantasy football business. They get the right to use the RedZone name. They can basically bundle RedZone or NFL Plus. So I'll get to how that bundle will kind of work in the future. But that happened before earnings. And they also announced a deal with WWE that will bring basically the biggest events from WWE to the ESPN streaming app, added more NFL draft rights. And then this is the one that was announced this morning as I'm recording. And this is where I think this is a game changer for ESPN and for winning the sports consumer. ESPN Direct to Consumer and Fox One will launch a combined bundle offer. That bundle offer will be $40 per month. So ESPN itself is going to be $30 a month. Add another $10 for Fox One. We don't know exactly what all the pricing is going to be if you want to add in Disney Plus and Hulu and all those things. But basically, ESPN wants to be the center of the sports bundle. Think about the cable bundle. Well, it was Comcast or DirecTV or Cox Entertainment, any of those companies. That was actually the company that you were interacting with, and then they split up their revenue amongst the networks or the channels that they were licensing. In this case, Disney and ESPN is going to be the company that you're paying, and then you can add on some of these services. So if you have ESPN, you can add on Fox One, but the core is going to be ESPN, and then Disney and ESPN are likely going to take a portion of the revenue from this bundle as well. So who's in the power position here? It's ESPN and Disney. And the reason this is important is because of a concept called the smiling curve. This is something that you can go back to for almost every single digital company. What ends up happening is the market plays out in what you think of as a smile. So the x-axis is the scale of the business. The further you move to the right, the higher the scale of the business. You want to have basically more subscribers if you're in the streaming business. The y-axis is going to be the value that you're going to extract. The profitability is the way to think about this. So why do you want to be in the top right? Why do you not want to be in the middle? Well, if you're in the top right, that means you have the most subscribers, and it likely means you have the best content. That means you can charge the highest price. So let's say that you have 4 times as many subscribers as a company that's in the middle of the smiling curve, and your prices are 5 times higher. Those multiply together. Now you can generate 20 times as much revenue as a company that's in the middle of the smiling curve. This is exactly what we're seeing in streaming sports. ESPN is going to be $30 a month. Fox One, at least what we know right now, is going to be $20 per month. That's not just going to be for sports. That's going to be for news, live TV, local TV, and obviously they're giving something up to be bundled with ESPN. So I don't know that this is going to be a great service on its own, but as part of that bundle with ESPN, it gets a little bit more attractive. But like I said, they're going to have smaller subscriber numbers and less revenue per subscriber than ESPN is. The other lever that ESPN and Disney can push on is bundling ESPN with Disney Plus and Hulu. You add all three of those products together, and I think Disney is going to get to the point in 2026 where they're generating more money from streaming than Netflix is. So now you're in the top right of that smiling curve. Now the next sports rights deal comes up. Who do you want to sign with? If you're, let's say, the NFL, they can opt out of their current rights deals in a couple of years. Who are you going to sign with if ESPN has 70 million subscribers and Fox One has 10 million subscribers? And ESPN is charging $30 a month and Fox One is charging $10 a month. Well, ESPN is not only going to have more money, but it's also going to have more reach for you. And this is what always plays out in digital businesses. Is the companies that end up winning are the companies that basically supply has to interact with because demand has already moved there. People are subscribed, so they have more money. If you want to sell to somebody and reach people, sure, Peacock may write you a bigger check, but if you actually want people to watch your content, you want to have it on Netflix. The same thing is going to play out in sports. I'm really surprised actually recently that the UFC announced that they were going to be on Paramount. Now, Paramount paid $1.1 billion per year. ESPN probably wasn't willing to write that kind of check because they're focused on bigger, wider reach sports like the NFL, college football, even the NBA. They have the best packages for all three of those sports. So that's going to be kind of the home base for their sports content. And for ESPN, this app, Paramount is going to have fewer subscribers, and they're going to have to try to figure out how to make money now that they're writing this massive, massive check to the UFC. So what this is going to mean for Disney and ESPN is that they're going to be able to drive more revenue and higher profitability long term. That's the two things that you get if you live in the top right of the smiling curve. How much more valuable is Meta Platforms than Snap? Meta Platforms worth almost $2 trillion. Snap is worth about $12 billion today. So they're not even in the same league. You're talking about orders of magnitude bigger. We're going to see the same thing when it comes to streaming. And there's two segments that I want you to watch as this plays out. So first is going to be entertainment. This is going to be the Disney Plus and Hulu side of things. So revenue starting to climb, and this is because of direct to consumer. There was actually, I think it was a 15 or 16% reduction in linear TV revenue in the most recent quarter. So these are all trailing 12-month numbers. You can see that revenue is starting to inflect higher because of growth in streaming. That's both adding subscribers and increasing prices. And now $5 billion worth of operating income over the past year. If we flip over to sports, sports has been pretty stagnant over the past few years, and that's because there hasn't been a big sports streaming business or a way to bundle. Yes, they have ESPN Plus, but that's kind of thrown in with a lot of other things. Doesn't generate a lot of revenue on its own. So now the ESPN is going to be a revenue generator, and at $30 a month, plus these bundling options, that's going to be potentially a lot of revenue starting to come in for the sports business. So now $17.6 billion in revenue and $2.9 billion in operating income over the past 12 months. So what if the streaming apps gets to 50 million subscribers at $30 a month? That's $18 billion in revenue. And I think we're going to see higher profitability than you see here. So that's the opportunity, is to grow the sports business and aggregate more and more of that content, more and more of that supply on a single app, whether that's partnering with other content providers or that's having more content just through the ESPN app. So the opportunity here is that Disney is actually at an inflection point, and the valuation is pretty solid. $200 billion market cap as I'm recording today, $244 billion when you include their net debt. That means the price to earnings multiple is only about 17.6. And like I said, we're going to see significantly more growth out of their streaming business over the next couple of years. Their other business, but let's not forget, Parks and Experiences is generating about $10 billion in operating income per year at this point. And they're investing about $60 billion in that over the next decade or so. So that's going to continue to be a growth driver. The streaming business and the improved profitability from both ESPN going over the top and also Disney and Hulu, bundling all those things together, that's only going to help Disney. I think the company could reach $30 to $40 billion in operating income over the next decade, add in some buybacks, add in dividends. And I think this is a company that could have 10x potential because of their lead in streaming. Like I said, this is a company that could be bigger than Netflix in streaming. And Netflix's business is worth $500 billion. So Disney's streaming business, if they win sports the way they think they can, that could be an even more valuable position than Netflix. So love what Disney has done recently, and the fact that ESPN is becoming the place where you can bundle other pieces of sports content is only going to give Disney more power, not only with the current bundles and subscriptions that we have that are coming as soon as next week. August 21st is when ESPN is going to be launching, same date for Fox 1. So obviously those two companies are working closely together. But as more sports rights become available, I think we're going to see the strong companies be able to scoop up more and more of those sports rights for attractive prices, whereas the smaller companies, the Peacocks, the Paramounts, even Max, are going to lose out on those sports rights. That means that they're going to lose subscribers. They're going to lose pricing power. They're going to fall down to the bottom of the smiling curve as Netflix wins in general entertainment, and I think Disney wins in both family entertainment and sports. That's going to be the power position they have in the market. And once you have that position in digital business, it's almost impossible to take it away. So love what Disney and ESPN are doing right now. And the fact that Fox really had to come to the table and say, you know what, we want to be part of your bundle, shows where the power position is in this market right now. So let me know what you think about Disney and ESPN's future. Leave your comments in the comment section below. And like I said, this is a company that I cover a lot on Asymmetric Investing. So subscribe to Asymmetric Investing. I'm looking for more 10x stocks there. And that portfolio has crushed the market over the past couple of years. So love to have you as part of that community. Thanks for watching, everybody. We'll see you here next time.